Hi, good afternoon. You're watching Closing Trades right here on 18 Hour with me, Aisha Faridi, Nikunj Dalme in the studios. And it's turning out to be quite a good day after good amount of consolidation yesterday. Today too, it turned out to be a quiet start. But from there, about an hour or so into the open, we managed to pick up and about 0.5% gain is where we've spent the better part of today's trading session. In fact, to think of it, we are not too far away from that all-time high on the index also, just about 1% or 1.5% or so. In fact, we're now trailing well above that 24,700 print as well in trade. We've broken above that resistance of 24,650, which was acting as a tough spot. And more importantly, it's the broader markets as well, which are mirroring what the benchmarks have been doing. You've got a stable VIX at your hand, stable global markets as well, banks, financials. They are also now participating as opposed to what you saw all through last week when the Nifty put on about less than 1% in trade and the banks didn't quite participate. So now you're seeing that rebound actually kick in, and Bajaj Twins, they are the ones which are lifting the mood clearly. There's IndusInd Bank, there's BOB, all of those names are looking upbeat, and RBL Bank as well, which began the day very well and is still continuing to hold on to its gains. So good market, 130 points up in the green. Didn't quite assume that this is how it's going to be when the day started, considering how listless it was.
No, and frankly, it's the bank nifty, Aisha, which has been this sort of weak link for the market. It is still in the morning when we last looked at it, it was a good 6-7% away from its all-time high, whereas benchmark indices are off by about 1-1.5%. So today, the bank nifty, for a change in a sense, is showing some muscle. But if one looks at the market setup, I think it is still the global push, which is the obvious factor. Within that, we are simply mapping to what the global markets are. And now this entire recovery, which started, let's say, from 2nd of August after that ugly Monday, I think is far more impressive than what anybody thought, both in terms of breadth and also in terms of participation. There are no large triggers now. You got the Jackson Hole meeting, but that's later in the week. That's a global event. But locally, there is nothing which markets would really look forward to. So I think now it is purely about technicals. It is purely about flows and purely about global flow, how markets would be taking their cues from. There is no large trigger in the system, at least in India now, which in a sense is going to be a swing event. Election is over, budget is over, earning season is over. Now everybody will look forward to data points on the Diwali and the Shira sales. That's about it, but nothing big in terms of an event which you could say could really have an influence or impact on the market in the near term.
Yeah, absolutely. Let's welcome on board Kunal, Naresh and Daljit Kohli as well to dissect the market mood this afternoon. Kunal, did you see this rebound and participation in the Nifty Bank? Because that's clearly reflective on the index, the fact that after a quiet start, we've managed to hold up so well.
Well, yeah, I was bullish on the financial services pocket, and I think that's one of the pocket where I believe there is a strong evidence of short covering, long built-up formation, as well as a very strong bottom in place for many of the stocks, be it the larger cap names, the likes of Bajaj Twins, be it the mid-cap ones, M&M Finance, AB Capital, etc. I think many of these stocks have gone through one of the tough times in the last 2-3 months, and there's strong evidence on the chart that these stocks have managed to find a major support for themselves on the short to medium term time scale. Volumes coming back, and I think that's some very encouraging signs. So I would probably believe that today's data on the F&O side for the bank nifty should also indicate more of short covering for the banking stocks as well as for the bank nifty overall. And the texture of the banking index is also very, very positive and attractive. It's not just the PSU or the private sector banking name. I think it's a mix of both of these ends of the bank nifty, which is doing pretty well, led by larger cap names like ICICI Bank, HDFC Bank, even Kotak Bank has come back about the 1800 mark. So I think on the back of this, expecting this recovery to sustain, but within the financials, within the bank nifty pocket as such, I would be very bullish on the financial services pocket from here on.
Okay, financial services it is when it comes to what Kunal is actually spotting in trade. Daljit, hi, afternoon. Is there merit in believing that banks are finally going to make a second comeback this year?
Good afternoon. So, see, it is more of a valuation catch-up and something which has not participated in this entire leg of rally. So, when you see at this time when almost all the market is buzzing, everything is on the costlier side, you would try to find something which is less or relatively better priced. I think banks have not done that well in the last few months. So that is why some kind of rotation is happening there. The problems of banking system, I don't think are just going away in a hurry. This deposit issue is going to be quite tough and not so easy to crack. It will take its own time. Not that it is a permanent failure or something like that, but definitely it will take some more time. So I think for the time being, as in our portfolios, we have moved towards the financial services part, which is mainly housing finance and some of the NBFCs. Those are the areas where we are looking at and preferring over the mainstream banks. So at this point of time, positioning is more towards the financial services company.
Nuresh, we are almost at a new high. I mean, it's a matter of what, 1% and then the ring of a new high. Do you see this market rally, which in a sense started 2 weeks ago, markets or Nifty is capable of not only making a new high, but it may well extend beyond that?
So there are two parts to it. One, the Nifty is doing well. The broader markets are doing well. To sustain above the new highs, will need support from the bank Nifty. And today has been the first indication wherein we've started seeing banking financials actually do some bit of an outperformance on a daily basis. It's been a long time we've seen that happen. So if that happens, if we see bank Nifty making a new all-time high and making a stronger move, then we are set up for a sustainable move above the all-time highs. For now, the viewers will face a lot of resistance around that 25,000, 25,200 mark, unless we see some of the heavyweight banking names make a breakout move.
Bunch of stocks which are also in focus this afternoon. IndusInd Bank, of course, we've been highlighting from the morning the fact that RBI yesterday approved setting up a subsidiary to undertake the AMC business. That stock, of course, has been holding out very well. A good 2.5% uptick, good amount of volumes as well in the stock. And then, of course, there's KEI Industries. UBS's view, they've initiated coverage now with a target price of 61.50. And this, along with Polycab, has been quite the mover in trade today. 8.5% of a notch up coming in on KEI. And then, of course, there's Hindustan Zinc as well. The board has now approved a second interim dividend of 19 rupees per equity. The total outflow to the company now stands at about over 8,000 odd crore rupees. Remember, this was one stock which was in focus earlier as Vedanta divested about a 3.25% stake in Hindustan Zinc through an OFS, and the stock was down about almost 16% in the last 5 trading sessions. And now, of course, Hindustan Zinc post that dividend announcement that they're going to be mulling, that stock has been holding up in trade. Last 7 days, of course, have been a rough weather for Hindustan Zinc. With this dividend, of course, Vedanta is going to be a huge beneficiary as well, because it, remember, still holds almost about 63.5% stake in Hindustan Zinc. So more than Hindustan Zinc, it's Vedanta which turns out to be a beneficiary post this dividend. But that said, let's just bring up some of the other movers in trade, and it's clearly all financials. There's RBL Bank holding up nearly 5% in trade. Insurance plays like SBI Life, HDFC Life, all looking good. Bajaj Finserv has been holding out very well. And then Balrampur Chini, which has spiked up a good 5.5%. That, other than the financials, is the one which is looking very smart in terms of a volume price action right now. That stock holding up almost 5.5% as we speak. Kunal, let's get in a check on Balrampur Chini, in fact, at 560.
I think it's looking attractive. In fact, it's one of the better performing names from the sugar pack, because at a point where many of the mid-cap end of the sugar stocks, I think, are trading just closer to their long-term moving averages or by a margin of 5%, 7% higher. This is one of the few names from the sugar pack which is trading at an all-time high levels, and now the stock is almost 40%, 35% higher than its 200 DMA, which is still placed at 400, 420 kind of a range. So I think that's the sign of a stock which has been absolutely strong in terms of the trend. I've been bullish on the stock over the last few weeks as well, and highlighted targets closer to 500, 550 range for Balrampur Chini. I think this seems to be a complete breakout move, and this indicates that the stock is restarting a very strong uptrend on the yearly basis. So would not be surprised that the stock scales past to levels of 650 to 750, potentially in the manner of next 6 to 9 months.
I'm just looking at some of the defense shipbuilding stocks here, and one is that we may look at the last 3 years and talk about what crazy bull run it's been for them, or we can look at the recent high and then talk about how some of them have corrected and collapsed. Kochi Shipyard is down more than 20%. Mazgaon down more than 20%. HAL is down by about 20% plus. So from the recent high, which is what you want to look at it, let's say 1 month change or 2 week change, the cracks are now clearly visible in some of these stocks. Diljit, is the party over in some of these stocks?
See, in these stocks, I would say they are valued much ahead of the time. So whether party is over or not, it will depend upon this theme, how much it continues, or if the liquidity continues to come in, and people find that this is an area where it is a sunrise industry. So much of growth is there and so much of potential. We all believe in all of those things. But the point is that at what valuation are you entering? So if somebody had entered 1 year, 2 years back, as you said rightly, that time it was something which was undervalued. But you have paid for probably for the growth of next 5 years, in most of these stocks. So the only way to get to the rational valuation would be the time correction. So I would, or we are actually, in any case, we are not invested in any of these stocks. And in fact, we don't advocate also getting into these stocks even after 20% correction, because we believe that they are valued much ahead of the time. They are all good companies. They will keep performing, but you have already paid them for next 4 or 5 years of performance.
Naresh, come in on the charts of some of these shipbuilding names, your Kochi, Mazgaon, GRSE, and do you see further breakdowns coming in?
So, in the short term, the charts look very clear that a top is in place. Whether we get into a much deeper correction, that's a question mark as of now, but there's a high possibility we go take a 20-25% correction from the top, which is very normal in such moves wherein there have been multiple X times moves. So in this case, say a Mazgaon which topped out at 5,800, going down to 4,000 odd levels would be pretty normal. So view is the top is in place, and then we could go sideways. So if you look at say what happened to Mazgaon Dock for a year before this recent move from 2,400, the stock was sideways for a year. Same way Cochin Shipyard for a long time used to be sideways. So this could be a good time to actually keep on trimming positions and not look to buy on dips because there's a good possibility if they don't fall 20-25% from top, they're not making the recent tops for many months together.
Right. Okay, let's take a very quick break on that note. When we come back, we'll throw more light on that UBS note which has come in on KEI Industries as well as Polycab and the entire wires and cable sector. That after this very quick break. Back with closing trades right here on ET Now. Let's now try and understand that UBS note wherein they've initiated coverage on wires as well as cable stocks. In fact, Ria is here from our research desk to give us a roundup of the note and why they still have conviction in these names even after the parabolic rise that both KEI as well as Polycab have already had. Ria? Okay, we'll just get to Ria in just a second from now. Seems like there's a bit of an audio connect over there, or disconnect over there rather. But yeah, both of these names are the ones which are flying high. And Daljit, you know, the point always is that no one's debating the long-term story when it comes to the wires and cables industry and how much of a growth that they can actually clock in. But the thing is, do you buy them at the current valuations after the run-up that these stocks have already had?
So we will definitely not buy at the current valuation. We are very clear, very conscious about the valuation part. We normally tend to avoid things which are too much of fancied and which go beyond valuation. So it is very important. We are, as you rightly said, we are also very bullish on power sector as a theme, entire sector, and it can be played through all its sub-segments. Whether it is in generation, transmission, distribution, ancillary providers, services providers. So, and we are holding some of those names in our portfolios also. But definitely, these companies are very good. They've been delivering good numbers, very strong growth also. But again, the entry point is something which we have to be conscious because from alpha generation point, it is very important that you should, at what level you are entering the stock, that will make the difference.
Way to value, Daljit, a stock like Ola.
Sorry?
Ola Electric,
Again?
what is the right way of valuing that stock?
Yeah, so again, we have avoided that. Right way of looking at it would again be the same. Are you believing the story and then building numbers on that, wishes and hopes that what kind of numbers will come? Or would you like to see some green shoots of those numbers in terms of profitability, I'm talking. So we will definitely wait for those. And that's why we have avoided the stock even at the time of listing also. Now, I am told some people we have discussed them amongst our peers so much. Somebody was giving me a very strange way of valuing this company, that you have to value them on the battery pack capability. No, per megawatt of what battery pack, what kind of value they have, and then compare it with Aman Raja and Excite. And if these guys are one step ahead with the battery, they're giving you the vehicle also. So you should give them double the value. Now, you have in bull markets, you have all these strange ways of valuing the companies. Last time we had seen price to sales multiple. This time we are looking at something else. So these kind of fads will keep coming in. But I think one has to remain rational to look at ultimately stock price will be the slave of profitability. We have to look at the profitability or if profitability, visibility of the profitability, even if it is exactly not there, but there is some green shoot, something coming up. Okay, next 6 months, next 1 year, you will see that number. So as of now, it is just on the paper, all the numbers, theory. We'll see how it pans out, and maybe at some point of time, we'll also enter.
At some point in time, not now, but let's get back to that UBS note on wires and cables. Ria is back with us. Ria, what does the note have to say?
Yes, so UPS has come out with a note on the wires and cables industry, and they've initiated coverage on two major players in the industry. On KEI Industries, they've initiated a buy call with a target price of rupees 6,150, and for Polycab, they've initiated a buy with a target price of rupees 8,550. Now, they say that this is the best play on electrification at the moment, and the segment is poised to grow at 2 times the GDP growth over FY24 to FY30, and they say that this growth is going to be driven by capacity expansion and strong domestic demand supported by the transmission and distribution capex and the real estate cycle as well. Now, they've also said that the favorable supply-demand dynamics are going to benefit the industry leaders, and the current $8 billion segment is going to be worth $20 billion in FY30, and further they've stated that the market share of the top 5 companies are going to rise subsequently. Now, on the export side, they've said that the shifting global supply chain and the incumbents' sizable capacity should lift export revenue from $2 billion in FY24 to $5 billion in FY30, and they also think that the consensus has underappreciated the potential ramp up of exports. Now, they see a 16% earnings CAGR over FY24 to 27 for Polycab, and for KEI they see a 24% earnings CAGR over the same period. Now, they've also said that these compounding earnings are going to support expensive valuations. And lastly, for KEI specifically, they've said that the stronger balance sheet and the improving brand strength would make a case to expand its product range to compatible segments like switches and switchgears and small electrical products as well.
Okay, that's the view coming in on KEI and Polycab. The way the stocks have been running up, perhaps renewed vigor after the UBS note. But Naresh, just very quickly on the charts, will these stocks continue to hold up, KEI as well as Polycab, or do you think there could be some correction for an entry point or perhaps an add to the current positions?
So the way the stocks have moved up sharply over the last many months, it makes it a difficult proposition in terms of a risk reward. But given that the trend have been strong, we don't go against it. But today was a one-day move on the back of a report, so there should be some fade-off move over the next few sessions. Because when we see such notes, we see a spike of 8 to 10% and then see a 3-4% correction over the next few sessions. So that would be my view. So for now, wait it out, wait for a 3-4% correction, and then maybe look out for a trade. But overall, the risk reward is still not in favor. So even if it comes down, it should be a more so of a partial trade rather than a full initiation.
Okay, let's also take in some closing trades on that note. But before that, Daljit, we'll let you go. Thanks as always for taking the time out and joining us today. Kunal, what are your closing ideas?
So I'll be bullish on Tata Power from here on, and my expectation is that the stock has formed a bottom for itself. In fact, it's tapped into a support territory of 410, 415 mark for the 5th time in the last 4 to 5 months. So expecting a very similar kind of a price action on the upside, which had happened in the previous 4 attempts. Buy on Tata Power.
Okay, a buy on Tata Power from Kunal. Naresh, what's on your closing trades list?
So that would be a buy on ICICI Prudential Life. We are seeing good momentum across the insurance space, and it has gone through a long consolidation as well. So ICICI Pru was last at these prices back in July 22. So looks like a 2-year breakout in the making. So once it sustains 70-50, could be a much bigger move, and the whole sector looks interesting. So ICICI Pru would be a pick.
ICICI Pru, that's Naresh's idea. We're going to take a very quick break on that note. When we come back, the last half in our trade this Tuesday.
Very rare mid-cap stocks which are going up on volumes today, and I'm just looking at, let's say, Angel 1, 14% higher, very strong volumes. Then there is All Cargo popping up on my Bloomberg screen. Praj 4% higher, Polycab 2.5% higher, and Unicommerce e-Solution, the company essentially what you can say it's a SaaS company, but it is more than doubled ever since it has gone public. So very differentiated names from the mid-cap space today are commanding a lot of action. Zomato top traded stock because of that block deal. Reliance Power is a 5%, or I should say another 5%. And Edelweiss Financial is almost at 94. Chakri, the bull run continues. Everyone is saying for how long?
Yeah, good afternoon. I hope it does continue. In terms of, there are enough levers for it to continue because, now the US Fed action is going to be sooner, hopefully in September. That'll make RBI do a rethink to cut its rate sooner. And, all this capex which has been installed in India will hopefully find an IT which has been installed, like those various sectors which are waiting for lower cost of funds or waiting for export markets will start taking the index higher.
Okay. Chakri, we've seen a huge comeback in new age companies, Ola, Paytm, Zomato. That space is riveting with action. On the flip side, which is on the other end of if I look at the other end of the spectrum, defense, railways, shipyard stocks, they are coming down, and they're coming down in a very linear manner. So why is the market taking a complete U-turn from old economy to new economy?
All the railway defenses clearly, as we know, has done exceedingly well in the last couple of years. They've gone up 3x to 5x. So there is clearly some amount of profit taking because now the questions will arise after making this kind of returns, saying that, where will the future growth for these defense and railway companies come from? These are all long cycle orders, whether it's railways or defense. And so once the order book is done, let's say in about 3 years, current order book, which is very good for the next 3-4 years, will there be another round of big orders which will take it up for the next 3-4 years? I think those are the questions which are pulling down the company's stocks now. It's not about the revenue growth or EPS. Those are very intact. Now, on the other hand, now new age companies, you take Ola, the company's valuation is more than double of a very similar company in China, Yadea, Y-A-D-E-A. That company sells about, I think, 12 or 15 million e-bikes. Double the valuation, I think that's because now the expectation is this company, Ola, will become one of those. They'll bring down their costs by having their own cell manufacturing, etc. I think these kind of expectations are building in, which are a sign of in a bull market you give benefit of doubt.
Okay, that's the take coming in on some of these new age tech companies. But what are the volume buzzers in trade? Let me take it across to Ansh. He's been spotting some trends. He joins in with more. Ansh?
Right, so RBL Bank will be the first stock in focus as the stock has given a good breakout from its downward sloping, actually falling wedge chart pattern, indicating very good potential of a trend going upward from here. Also, it has been given backed by good volume of around 2 times its average trading volume of last 10 session. Apart from this, SBI Life will also be in focus as the stock has given a good breakout from its consolidation pattern and surpassed above its 20 DMA level as well, along with good volume of almost 2 times its average trading volume of last 10 sessions. Also in open interest, we are seeing a good spike of over 9%, indicating very good participation in derivative contract. Apart from this, we are seeing Apollo Tyres also being in spot today because it was trading in a strong downward sloping channel, and today it has given a good breakout from its sideways consolidation pattern, indicating a good potential reversal in trend on upside. Apart from this breakout stocks, there are high potentials of National Aluminium getting into banned list, and apart from this, we are seeing India Mart, Chambal Fertilizer and Punjab National Bank also has high potential of exiting the banned list. So keep an eye on the stocks.
Okay, 80,000 on the Sensex, which got challenged only for 1 day last week, 2 days actually, and what a comeback it's really been. In the morning, I think we were discussing cement, that how some South companies have taken a price hike in cement, and that's one sector where underperformance has been quite stark. Let's look at Ultratech, Ramco, Dalmia, India Cement, which is now Birla Group company, Mangalam Cement. I can throw in Adani Group of companies, ACC, Ambuja, both of them. And you can actually see that cement is one space where we are not seeing any kind of an action. Chakri, are the decks now getting clear for cement to do well, simply because this is one sector where we've not seen a price hike or pricing power coming back in last 5-6 years, and now things are changing after the consolidation?
And these stocks have all done nothing for the last couple of years, simply because of volumes have been there, but no price increases. So they don't have the pricing power, it appears. And clearly it's because of Adani entering into the fray, making ACC, Ambuja acquisitions, and then Ultratech trying to scramble to keep its market share. Now, against this whole backdrop, things are not unlikely to improve in terms of the pricing. So the margins are unlikely to improve. Second, now it's also going to be interesting to see what will happen because of the Supreme Court mining tax. Many of these companies, Ramco Cements, India Cements, quite a lot of these companies, because they all have limestone mining, and they're all going to be hit as well. So which means the margins is again going to be down. So I don't think there's any margin going to come, which means the multiple will derate for the sector.
Since we're on the subject of cement, here's Rakesh Arora as well from Go India Advisors and what he's making of the sector right now.
So consolidation is definitely going to continue. At the moment, we have got 2 clear leaders. And then we have, second rank companies like Shri, Dalmia, and now probably JSW is entering that ring. But, I think there's enough space for everyone to grow. But the top leaders are growing much faster, and they are also very opportunistic in their acquisitions. So they're not just growing organically. Inorganically, they are trying to gain market share. And I don't think that trend will change much. We should expect some more consolidation by these 2 players.
Okay, that's Rakesh Arora talking about what he's making of the prospects of the cement space right now. The other segment which is in focus, of course, has been Zomato post that Anfin block deal right now, wherein they're the likely seller. About almost 2.5% equity has already changed hands in Zomato today. That's the 3-month chart. Let's bring up the today chart. And the floor price is implying a discount of about almost 2%. Remember, Anfin Singapore held about 4.3% stake, so they still have some residual left in there. But since we're on the subject of Zomato, we spoke with Swiggy as well today, and we were talking about the much talked about platform fee, whether that's going to impact consumers, what is it that Swiggy is planning to do about it, their IPO plans. Here's a word coming in from Rohit Kapoor.
There is a clear realization in the new world that every business at some point and stable state has to make money and deliver, right? So that is just going to happen in terms of companies having to focus on growth and bottom line at the same point in time. I think platform fee is something which exists across categories. it's called platform fee in some cases, it's called convenience fee in some cases. For example, if you book a cinema ticket today, you pay convenience fee. If you book a airline ticket, you pay convenience fee. If you book a train ticket, you pay a convenience fee. It's nothing new. And consumers are very used to paying a certain amount, which is actually compared to the overall average order value, it's not a very large amount. And what it does is it provides the company the stability in terms of the cost that you incur, because in any company it's not just the cost for that order delivery. There's a huge back end of technology, product investments that you need to deliver something well to the consumer. So I don't think, frankly, we have seen a big issue in terms of consumers worrying about platform fee, as long as we are delivering the service that we are supposed to deliver, right? So I think this is pretty standard in food delivery across the world and in multiple categories in India.
LIC is down, other life insurance stocks are up. So it's not like the entire pack in a sense is reverting up in the same direction. It's like LIC is down marginally. But SBI Life, HDFC Life, life insurance, I'm not talking about every insurance company, life insurance is actually up. In fact, LIC has said that they're looking for acquiring a company in health insurance, and what could be up for grabs in the private sector, I don't know. LIC will have to buy something large, otherwise it will not make sense for them to move the needle. But within the listed insurance space, I think there is Religare, which indirectly owns Care, owned by Dabur now. It's become very complicated and messy after the change of guard there and after what's happening in terms of the corporate governance challenges there. Star Health, it's a company backed by Rare Enterprises and a couple of P investors, but they are trying to reboot themselves from moving from wholesale to retail in terms of their profile of unit holders. So these are two companies which come at the top of my mind, at least when it comes to the big options available in the healthcare space. Nuresh, are things looking strong now for the insurance space finally?
Yes, across the board we are seeing good momentum. We've seen HDFC Life, which was sleeping, also move up. We are looking at ICICI Pru coming back to a 2-year high. SBI Life, which has been a leader, continues to do well. Even ICICI Lombard. So insurance as a pack has been doing well. Even after the recent correction, LIC has also done pretty well over the last 3, 6, 12 months. So it has taken a dip from 1200 to say 1000 to 1100 mark, but the stock was at 650 odd levels back in November. So the trend is pretty strong across the whole life insurance pack. And mind you, these names some of these names have gone nowhere for the last 2 years. So HDFC Life has gone through a phase of consolidation for almost more than 2 years, or even more. Say pre-COVID also the stock used to be 650 and today we are at 700 odd levels. So looks like a structural breakout across the board, and we could even see LIC going forward breakout, or even ICICI Pru. So the whole basket looks interesting at current levels as well as on dips.
Chakri, is there anything that you're particularly scouting for in this current market? I know, it's a no-go for any fresh investments, but anything at least that you're keeping on your radar if and when the correction comes in?
IT is very reasonable. Clearly, with all the US now clearly looking far more favorable than it did a month ago, and the valuations of Indian IT companies were never really expensive. They always reflected their kind of a growth. Now, if there is an acceleration of growth, then TCS, HCL Technologies, the entire front pack, Infosys, they all look good. Midcap, Emphasis, Persistent. These are the first companies because they have a big exposure to financial services companies in the US who their clients are. And those are the guys who react the fastest whenever the interest rates are cut in the US.
Okay. Kunal, Adani Group of stocks. The bull market is intact. Adani Group of stocks have gone through that first bout of volatility and now they're making a comeback. Are they on course to make new highs?
I'm not sure new highs, but yeah, I think a course of revival could be at play for many of the Adani Group of stocks, because what's happened over the last 2-3 months is that many of these stocks have gone sideways. Now, when you look at Adani Enterprise, for example, the stock has been just guiding at the 3,150 odd mark for the last 2-3 months. There have been periods when the stock has moved above as well as below those levels. But most part of the trading has happened into this band of 100-150 points, which is a 5% band for a stock like Adani Enterprise, and 5% for a high beta stock is considered to be a very narrow kind of a band for stocks like Adani Enterprise. Same is the case with Adani Ports. That stock has also been stuck into a range, I think 1450, 1460 as a support and 1550 approximately as a resistance. So again, a band of almost 6%, 7% for Adani Ports. But the good part about the stocks on the short-term charts is that the indicators have started to show signs of robust, robust action. So which means that if indicators get into a breakout mode, sooner or later these stocks would probably end their phase of consolidation and head back towards the breakout of the previous resistances. So I think in terms of risk reward, in terms of potential, these stocks are ripe for a second round of a breakout as well as an end of this consolidation.
Right. That's the take coming in on the Adani names. By the way, our research team has managed to dig out data of how some of these defense as well as shipbuilding names have performed in the last 1 month to how they've panned out in the last 1 week. And some of the biggest, losses have been in a Garden Reach. That stock has sunk about almost 30% in the last 1 month. In the last 1 week alone, you've seen a 12% price damage. Cochin Shipyard, an 11% fall in the last 1 week, almost 19% in the last 1 month. About a 2% fall for Data Patterns, 10% fall over a month's time. Similar has been the price action for a BEML, which has fallen about almost 8% in the last 1 week, and almost a 19.5% fall in the last 1 month or so. And that's pretty much been the case with the HAL as well. Although this has been a lot more resilient than some of the other players, it's not fallen a whole lot for the last 1 week. It's been largely in consolidation. But in the last 1 month, yes, it's fallen about 1.5%, a lot less, of course, than even a Solar Industries or a Premier Explosives, etc. But clearly, I think, Nikunj, the fall in the last 1 month for these defense and shipbuilding names is quite evident. Most of them are sitting at double-digit losses.
This is a correction which was long overdue, and we could have argued about it that, why did these stocks rally at all to these levels? But that's how, in the short-term markets move. I think the unfortunate part here is that last 3 months, we've seen a lot of AMCs, they've come up with NFOs, and especially popular NBFC, AMCs have come up with NFOs which are specially catering to defense, the Great Defense Opportunity, the Defense Fund, the India Defense Story. A lot of these NFOs have come, and that in a sense really became the compulsive factor because collections were strong and because defense stocks are in a bull run. And when that money came into those NFOs, they had a compulsion to invest because the mandate tells me that they cannot sit on a large amount of cash. So that in a sense became this real compulsive factor why we saw a mad rush in last couple of days. I just want to look at one data point, and let's look at, Kunal, which is the leadership name. Let's look at 2. I want to look at 7th of June. For me, that is the turning point, right? That's the time these defense stocks, they really, they really cracked. And then from 8th June onwards, they started recovering. So if you have to really compare the defense stocks or railway stocks from 7th of June, where are they now?
Well, I think HL is the only one. HL and BL, the other two ones, they are the ones which are stronger and they are still above their 7th June or 6th June low. Cochin Shipyard, Masscon Dock, many of these names are trading below. Likes of RVNL, I think, and many of the other stocks are also trading below their 6-7 June swing lows for themselves. So
that's the point, isn't it? I mean, that entire comeback trade what we saw from election, and that comeback trade is now reversed completely. You've gone back to June 7th lows.
In fact, Varun is waiting by. He's been going through some of the chart patterns of these names, how these stocks have performed, what are brokerages now saying about them. He joins in with more on that. Varun?
So, if you look at the stock performance in last 1 week or 1 month, you can see that the most glorified defense story is getting faded out. If you look at some of the funds, some of the NFOs that were launched in the month of June and July, even they have started giving negative returns. If you look at Motilal Oswal, Nifty India Defense Fund, it is down 5% in last 1 month. HDFC Defense Fund, it is down by 3%. And let me tell you, Aditya Birla, Nifty India Defense Fund, the NFO is still going on and it is going to get closed on 23rd August. Some of the stocks, if you look at, HL, in last 1 month, it is down by around 5%, BDL by around 10%, BML, it is down by around 20%, Idea Forge, Data Patterns, Solar Industry, Premier Explosive, even the likes of some of the shipping and defense counters like Masscon Dock, Garden Reach, Cochin Shipyard, they are down by around 16 to 27, 28%. So if you look in last 1 month, there are many defense stocks and shipyard stocks which have taken a steep beating. If you look from the 2024 highs, then BML is down by 30%, Engineers India by 28%, Cochin Shipyard, Bharat Dynamics, Ircon, IRFC, even the railway stocks, they have started taking a beating. So it's not only defense and shipping, but also the railway stocks which have started taking a beating. So in last 1 week or 1 month, if you look, the whole story or the rally of defense stocks or the PSU stocks have started fading off.
We've spent a lot of time discussing defense stocks. Let's not discuss them. Let's discuss railways. Let's discuss shipyards. He's not there. Right?
Okay. In terms of railways, I think if you look at one of the things happening is you take a company like, for instance, Titagarh Wagons. Titagarh Wagons, they recently got an order again from the government for some 90,000 wagons. They've expanded into lots of new areas of businesses which they never did, like metro, back end, even more higher margin business. Now, so as long as that business momentum comes in, they're creating new revenue streams for the company which did not exist. Then the valuation will hold, and at least the stocks won't crack to justify the huge run-up. So I think that's one thing you're seeing in the railways, which is the order flow and the business momentum is continuing to hold. Shipyards is a slightly more difficult story because, to make submarines and ships is far more involved, far more timeline involved. And therefore, those stocks have cracked more because, the replacement value of the order book is more difficult to come by.
Okay, that's the name coming in on some of these shipbuilding names. What else is holding out? It's clearly life insurance plays. They are the ones which are really popping out on the radar. They're the ones which are holding out very smartly. HDFC Life, SBI Life. Chakri, are you picking up anything on these life insurance plays? Because we are finding it hard to dig out any news.
Not really, because, there's such long forgotten names. Haven't really looked at it for quite a while. And I think it is just that the fact that they probably maybe are oversold a little bit, but a trade at the best.
Life insurance stocks are long forgotten, Chakri. How is that possible? Value of life. Remember that ad? Value your life, not the car.
You're right, absolutely right, Nikunj. I think, the valuations to begin with for this whole sector was so high, and they never really corrected the valuations wise. The growth kept coming, but losses kept mounting. So I think that trend has not really changed for the sector.
Trying to be curious here, when you say valuations are stretched, I mean, what benchmark should our viewers use to understand how valuations are for life insurance sector? Is it EBITDA? Is it premium? Is it insolvency ratio? What is that number which one should look at?
If you look at the combined ratios, for example, of the company and the growth that was supposed to be insured, and the growth that was supposed to be insured was to be a profitable growth. Now, with price erosion happening in the sector, not just now, over the last few years, that growth has been unprofitable growth. And therefore, the combined ratios and the persistent ratios did not really hold up for you to provide that justification when these companies went public about 5-7 years ago.
Okay, can't take your eyes off from Balrampur Chini. That stock is now holding up a good 7%. Remember, JM Financial came out with a note. They maintained a buy, put a target price of 640, which also indicates from the CMP of 551 thereabouts, a good 14% of an upside. Now, they believe that Balrampur Chini's investment of 2,000 crore rupees, which they have made in PLA, is going to create significant value. What is PLA? Polylactic acid, the physical properties, manufacturing process, biodegradability, pricing, they think for PLA makes it best alternative to fossil-based polymers. And domestic demand for PLA, they believe, is going to outpace the global demand led by the regulatory push. And Balrampur's partnership with global companies is going to make it one of the global or leading global bioplastic player. And that's going to see an improvement in the EBIT mix of the non-sugar business as well, which is making it a very, very structural play right now. 7.25% of a tear coming in Balrampur. 570 is where this particular stock is right now. Chakri, on the entire renewable theme though, where is it that you're most bullish?
Renewable is still, I guess, an easier way to handle because you look at Suzlon, the earnings were really strong. They hold probably about 25-30% market share, and the outlook for the next couple of, not just a couple of years, more than that, is very strong. And that number will continue to grow. Some 40 gigawatts is supposed to be going into the renewable space. Sterling Wilson, whenever Reliance starts accelerating its own business in the green space, that Sterling Wilson will also benefit.
Okay. Let's start wrapping the market. 5 minutes to go. Nothing large, nothing incremental which could be said, but I think we are chugging along very, very smartly. I mean, in cricket parlance, these are those ones and twos you take. It's not about hitting a six on every ball, and I think that's evident in the way how the Bank Nifty today has crawled back into motion. The Bank Nifty comes back and Reliance chips in, then you can be reassured that in the near term the market momentum is going to be on the long side. 2988, almost 3,000 for Reliance. Where is Jio Financials? Naresh, we've not discussed the stock in ages, right? I mean, this used to be like the most discussed, most overhyped, most talked about stock, and nobody's talking about it. Why?
So once the stock tends to be sideways, we stop talking about it, and the stock actually, after making that huge move, has gone sideways, and also the volumes have dried down, and concerns on valuations remain forever. But that was the case even when it got listed. So for now, it's seen a good enough correction, 15-20% from the top, but volumes have totally died down, so no view here. But this could be a place where it could consolidate maybe for a few months more. 280 odd levels could be an entry price, so we are still away from that.
Very quickly, let me take in some BTST trades as well. Kunal?
So I'll go with two buy calls. The first one is about an ICICI Pru with a target of 780, stop loss at 720. And Balrampur Chini continue to be bullish on with a revised target of 600, stop loss at 540.
Right. Naresh, what about your BTST ideas?
So first would be a buy on ICICI Pru Life again, stop loss at 738, target price of 760. Second would be a buy on Can Bank, which is setting up for a bounce, stop loss at 110, target price of 116.
Okay, just 2.25 minutes left to go before we wind up for this Tuesday afternoon. Chakri, we'll let you go on that note. Kunal, Naresh, good to have you guys in the studio as always. And winding up with a good 0.5% of a gain coming in for the Nifty. So not bad at all, given that it's, it started off relatively quiet, much in line with where we left it off yesterday. 24,680 on the spot Nifty, 24,710 on the Nifty futures, a gain of about 114 points there. Good thing is that the broader market outperformance as well stays, and today they've actually managed to do a little bit better, at least on the Midcap index front, than the benchmark indexes. So the breadth as well has closed in nicely in favor of the advances. About a 138 count within the F&O universe for the advances, to about 47 to the declines. The big movers from within the Nifty, it's really been all about life insurance today. SBI Life, 5% uptake. HDFC Life, almost a 4% move. Financials like Bajaj Finserv, 3.6% higher. Shriram, up 2.6%. IndusInd Bank, higher by about 2.5%. So financials as a sector is the one which has really taken the lead in today's trading session. Also, of course, Bajaj Finance, Kotak, Axis Bank as well held out quite smartly in today's trade. Other than that, of course, there's also been some gains in names like a Hindalco, a good 2% move there. BPCL has been a very smart performer from the word go today, a 1.6% gain coming in there as well. TechM held out very smartly. And from within the liquid universe, Balrampur Chini, like we just flagged off, that was one of the rank outperformers in trade. Other than that, of course, RBL Bank did a big move today, about a 4.25% uptick coming in there. Have to mark the laggards as well. ONGC, after the heady run-up the stock has seen over the last 1 month, finally quieted down a little bit, 1.7% lower. Bharti, Adani Enterprises, ITC, Cipla, and autos were languishing today. So Tata Motors, M&M, pretty flat over there. Reliance as well did not do a whole lot, just marginally higher. ICICI Bank just scratching the surface and holding its head above water. So pretty quiet moves coming in over there as well. The laggards though were the likes of Sun TV, Hindustan Copper, which fell 2%. Birlasoft, the big mover from yesterday, that saw some profit taking. UBL was down about 1.6%, and Zomato, of course, post the block deal, also took a bit of a breather. But that's pretty much it on this edition of Closing Trades. It's a goodbye from Nikunj and me.